The street extends gains after a flat week with the Nifty now heading near the 24,000 mark. Banks are charging ahead with both private and PSU indices higher by 2% each. All sectors advance in trade. Brokerages remain constructive on Hindalco after its strong earnings momentum, though some analysts see valuations turning expensive after the recent rally. Management highlighted record upstream aluminium margins, stronger Q1 pricing trends and improving visibility on Novelis operations. Aisha Motors gained after management expressed confidence on premium motorcycle demand and export growth while outlining aggressive capacity expansion plans for Royal Enfield. Meanwhile, Torrent Pharma rose on strong India growth and successful semaglutide launch. NTPC Green slipped despite strong revenue growth as profits declined and margins softened in Q4. Meanwhile, Century Ply and Vikran Engineering gained on record earnings, improving demand trends and strong execution visibility backed by healthy order books. Fuel prices have been hiked for the fourth time in just 10 days as the West Asia conflict continues to disrupt global energy markets. Petrol and diesel prices were raised by over 2.5 rupees per litre across major metros. Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsaita. With me Sajid Mangat, and let's have a look at what's playing out on the index today. A very nice gain, in fact, 1.33% higher on the Nifty 50 index and sustaining, or rather 1% higher, 250 odd points higher. We're still testing 24K. That's been the story right from the start of the day. We did near the 24K mark, 23,996. Is the high point of the day, but we've cooled off. It's a fairly range-bound day of trade as well. We've fluctuated within a very, very narrow 70-point band between 23,922 on the low and 23,995 on the high. So it's a very kind of tight band that we've traded in. Now, the banking stocks in particular are in focus today. The kind of moves that we've seen, the Nifty Bank all green across all constituents. Canara Bank is up 3+%, Union Bank, PNB. So the tilt is PSU, but the weightage is being delivered by the heavier private sector banks. HDFC Bank is up 2.25%, Kotak Bank is up over 2%, Bob, Axis, IndusInd all up over 1.5%. ICICI Bank also up nearly 1.5% in trade. So you're seeing very, very decent moves coming in from all of these counters. Now, talking about the Nifty 50 again. So, of course, you're seeing that impact on the Nifty. But outside of that, Aisha Motors and Adani Enterprises are two stocks which are absolutely flying in trade, 5% plus higher on both of those. Tata Motors PV is the other one, nearly 3% higher on Tata Motors PV. Bajaj Finance up nearly 3% as well. Wipro, Larsen and Toubro, Eternal, Bajaj Finserv and HDFC Bank are some of the gainers in trade, all clocking 2% plus in terms of gains. Just 10 stocks standing to the red. Max Health is one of them, the 6% knock on the stock on Friday. Following that, we've also seen another 2% lower on Max Health in trade today. Hindalco is the other one, again earnings candidate, 2% lower. ONGC, Bajaj Auto, Nestle, milder losses, especially on a Nestle and a Bajaj Auto. ONGC down 1.8 odd percent. So that's really the tilt. In terms of sectors, let's pull those up as well. Give some perspective on what's playing out. IT, which was sitting in the red, has now flickered back into the green, 0.5% higher on IT in trade. FMCG is down 0.25%. PSU banks up 2%, Fin Nifty up nearly 2%, Bank Nifty up 1.8%. We spoke about that. Excuse me. And the Nifty Realty Index is up 1.5% as well. 1.4% higher on the Nifty India Defense Index. Auto has cooled off as a pack since the morning, 1.3% higher on the Nifty Auto Index. Some of the stocks which have cooled off, the likes of an M&M, Aisha obviously continues to trend higher, but M&M, which was up over 2% in early minutes of trade, has now cooled off to that 1.4% higher mark. But you're still seeing some very decent gains there. Lastly, I just want to quickly flag off some stocks which are trending on the back of earnings, and I did speak about a few, but Greenlam is one of them. 7% higher on Greenlam, even though the day's high would be around 12 or 13% higher. It's cooled off from the day's high. Narayana is the other one. We spoke with management, 4+% higher, and we'll give you a short chunk of the management at some point on this show, so stay with us. Gokaldas Exports, 2.5%. Century Ply has cooled off sharply, just 2% higher. You've got Fortis Hospitals as well, which is up around 1.1%. We spoke with management there as well. Godavari Bio is down over 6%. So that's the one which is really taking it on the chin today. Oil India down 3%. IGL up nearly 4%. NBCC up 2.5 plus. Realty up 2.5 plus, both on order wins. IGL, of course, on increase in CNG prices by around rupees 1 per kg. That's what's keeping IGL in the news. Let me though bring on board Nilesh Shetty of Quantum Advisor, joining us to give us a sense as to how he's looking at markets. Nilesh, what do you make of the move today and in general with regard to markets?
Yeah, I mean, the markets today are basically reacting to overnight developments, hoping for a sort of peace dividend in the Middle East. Generally, we have been a bit more cautious, given that India's deep linkages with the Middle East and emerging headwinds. I mean, if you look at the risk of El Nino and what it does to rural demand, the risk of wage hikes in IT or wage job losses in IT, which may again impact consumer discretionary demand. The fact that cost increases have not yet been passed through, including on fuel and a host of other commodities, which may again threaten corporate margins. We've been slightly more cautious on the market in the near term. I think there is a negative surprise on the earnings possible over the next sort of 3 to 6 months. And valuations perhaps have sort of moved a bit ahead of that in the rebound that has happened in the April. So we remain slightly cautious at the moment.
Nilesh, how are you looking at some of the OMCs now? Do you see some value there? Because most of them are now trading almost close to 1 times for price to book.
Yeah, unfortunately, it's very difficult to take a position in OMC because you don't know how the government will react in different market environments. If tomorrow they were to announce a policy saying we'll have a fixed subsidy and then they can do what they want, suddenly you'll see a big re-rating in that pack. But because in times of sort of crude price increases, you have just no idea what kind of burden these companies will bear. It becomes very difficult to make a valuation assessment in these companies. So we actually don't have any allocation in the entire bucket.
What are you looking at today, market, PSU banks and private sector banks?
We continue to have a large allocation to private sector banks. It's like a 20-year low valuation that we've seen there. Surprisingly, post the COVID rally, they've been the biggest underperformers. As an entire pack, they've just not moved. In the interim, the book values has moved higher and sort of earnings for companies have moved higher. So it remains very attractively valued. Just we have to wait patiently for credit growth to pick up. And if it does, you'll see a re-rating in that pack. Public sector banks, we tend to be very cautious. It is a very benign sort of credit cycle right now. NPAs are very, very low. But if it were to pick up, you will see a big impact there coming through. I mean, there tends to be a stark difference between private sector banks and public sector banks in terms of NPA creation. And that is when sort of the public sector banks tend to get derated.
And NBFCs, because that's also one segment which is active today in today's market, pulling up the market.
Yeah, we actually have very selective allocation there. It's not the cheapest of bucket actually. So private sector banks have not done well, but selective NBFCs have done quite well. We have a small position in a mortgage finance company there. But apart from that, again, we really don't have much allocation to the NBFC space.
Okay. What about insurance, Nilesh? Is that something that you're actively looking at as well?
We actually have a very large position on the general insurance as well as the life insurance side. They have actually gone through material derating over the last 4 or 5 years. Some regulatory headwinds as well as distribution side changes which sort of impacted their business. But looking at where the valuations are, I mean, most of them trade at between 1 to 1.5 times price to embedded value. We actually have a material position there and we think they will do well over the next 3 to 5 years.
What's the thesis there? You just think that one, valuation comfort, two, growth? Because I remember reading over the weekend Sridhar Sivaram of Inam suggesting that especially on the life insurance side of things. There's only savings which is currently getting pushed, which is not the best product from a customer standpoint. And that the term product is actually not doing as well and penetration is not going up. Your view, if you have one and because you like insurance, give us the thesis there.
Yeah, one is, of course, there is a structural story which plays out. Second is valuation. Now, in India, it is not that easy to sell a term product. It is still a savings driven industry and it will change gradually. It is not an overnight phenomenon. Post COVID, you saw a sort of shift towards term products. And as sort of the economy matures and the individual matures, suddenly you will realize, say, insurance is not a savings product, it should be an insurance product. It's a gradual shift. Whenever it happens, margins will pick up. Term products are a lot more profitable products for them than the pure traditional savings product. But apart from that, our thesis has been very, very simple. The sector has been derated materially. We think it's a structural story. We think some portion of the savings pie will continue to go to insurance. And if you are in quality companies, you will see them do well over the next 5 years, 10 years.
And what about LIC in particular? Standout numbers. Nilesh, I know you may not have the bandwidth to talk stock specific, but would it be the private players you prefer over the PSUs?
Yes, we've actually preferred private players, and within that, the market leaders, because they are available very, very attractive. A lot of the public sector companies, we are just not comfortable with their underwriting standards or risk control standards. We are not sure what else may come up in these numbers. So we preferred sort of private sector players in the portfolio.
Nilesh, so we've spoken extensively about BFSI. Let me switch the tilt. What else are you liking?
Surprisingly, we are adding a bit more in IT. The strategy remains a value strategy. So we tend to be where the market sort of pockets where the market does not like or where we think there is a valuation comfort and some catalyst to play out. I mean, there has been a significant derating in that bucket. Most of these companies are now available at 4-5% dividend yield, which we've not seen in these companies, I think, in the last 26 years. So again, as long as there is this arbitrage in talent, despite the deflation that AI can bring, I think the productivity gains and the overall increase in opportunity set will throw up opportunities for them to grow. I think you may have to be slightly patient over the next 12 months for a lot of these AI froth to settle down. But once it does, you may see these companies start doing well.
High conviction. Actually, Nilesh, what I'm going to have to do is slip into a very short break. I'm going to come back. I'm going to quiz you on IT. I'm very curious to know about this position that you're building up with regard to IT and what you see unwind maybe over the next 12 months. Stay with us. We'll take Nilesh's view on the other side. Welcome back, and you're watching Closing Trades, and thanks for being with us. We're in conversation with Nilesh Shetty of Quantum Advisor, and we were just speaking about how he's liking the opportunity in IT. Nilesh, you were giving us the thesis as to how you see this unfold over the next 12 months. So how do you see it unfold? What's the impact, in your opinion, of AI? Will there be revenue compression? Will there be an increase because AI-led revenue will drive growth? Will other revenue contract? How does it play out in your view?
Yeah, if your horizon is next 12 months, you should expect some deflation in revenue. These tend to have a slightly longer term horizon. Now, what is a thesis? One is people underestimate the scale of legacy systems that is out there in the Western world. Estimates range from $1 trillion to a few $1 trillion. Now, a lot of these legacy systems need to be modernized. And these legacy systems need to talk to a lot of the new developments in IT like AI. Now, people also underestimate how enterprises behave. No enterprise is ever going to allow a vibe-coded software to be plugged into their enterprises. They need a layer in between which allows for security to ensure their data is protected and overnight they don't have disruptions. Now, each software has to go through a maintenance cycle, to an upgrade cycle, which these AI LLMs just cannot do. You need a service provider to be able to do all that. So our sense is there will be opportunities that will come through because of AI. The question is the productivity gains and what kind of deflationary impact it can have on the revenues. And there could be deflationary impact, but our sense is eventually the new opportunities that will come through may surpass the productivity gains which causes these deflation, and that is a simple bet. The other bet is valuations. At these valuations at 5% dividend yield, they look very, very attractive. And our assumption is a lot of these negative risks of deflation is already built into the price.
Nilesh, if that is the case, at what level you see value creation in the entire AI cycle, and which are the companies that will benefit because of that?
Yeah, again, that is still very, very hypothetical because AI itself, you have to figure out what is their revenue monetizing model. Because eventually, if they start imposing actual costs, and we've seen studies that Indian engineers, non-AI work may actually end up being cheaper than sort of AI models and AI tokenization costs. So again, a lot of it is hypothetical in terms of value creation because of AI. But again, our sense is the simple bet is valuations are in your favor. There is some catalyst available that may eventually have sort of businesses which throw up new opportunities for them, like it's happened in previous technology disruptions. Our sense is the larger companies may perhaps be able to capture it because you need a lot of investments to be able to integrate a lot of AI in your offerings, and you need deep domain knowledge, and you need a particular skill set of people who understand this linkage, which the smaller companies may not have the balance sheet to afford. So in that sense, we've actually bet a bit more on the sort of top 4 tier companies in the IT value chain.
So if you're looking at revenue deflation, do you think that the kind of opportunity which AI is going to bring for many of the top tier IT companies will be able to offset the revenue deflation which is coming in there?
Yeah, see, revenue deflation is not new. They've always had revenue deflation even in their existing business, which they were compensating by getting new businesses from these clients. Our view is it's unlikely IT budgets from companies will get cut. Our sense is it will actually just expand because of AI. So they will essentially have to do more work with existing revenue base or higher revenue base, which I think is what compensates for the revenue deflation.
Hmm. Aside of the top tier, do you have any call on the second rank companies like a Coforge or other or any other company? Emphasis, Coforge, Persistent.
Yeah, I mean, a lot of them have their own niches where they're very good at. But the deflation that we've seen in the larger cap IT valuations, the mid cap sort of peers are nowhere close to that. And traditionally, if you remember, mid cap peer used to trade at a discount to the large cap peers, which is sort of reversed over the last few years. So again, at these valuations, they've never made sense to us for investments.
And what about stocks and sectors which have done very well as of now? What are you doing there? Power, metals, those are sectors which are, even PSU banks to some extent have done very well for themselves. What do you do in sectors like that?
So we've been trimming them. So we've essentially reduced our allocation to metals. Auto was a large position that we had till a couple of years ago. I mean, they've actually had a fantastic run over the last 24 months. We've reduced our allocation there as well. Incrementally, a lot of the money has gone in insurance, in logistics companies actually, because they took a bit of the brunt of impact on trade because of the war, uh, and implications on trade because of that. So again, the sectors that have done well have seen significant reduction in our portfolio. We've not had an allocation to PSU banks as such. We only had a single bank in that, which we've again reduced because of valuations.
And Nilesh, what's the thesis around metals? I mean, so of course, one side of the argument is that prices have gone up and therefore that rally has aided all of the stocks. But the other side of the argument is balance sheets are probably at its cleanest point over the last maybe 10 to 15 years because of the kind of multiple year run up we've seen in terms of pricing of commodities. And therefore, do you believe that there is some inherent disproportionate advantage in any case built in from an earnings standpoint?
Yeah, I mean, metals, those who followed cycles over a period of time, tend to be very simple investment case. You buy when there is stress in the system. You tend to buy companies with clean balance sheets who can handle that stress. The stress forces weaker players to move out, and then people who remain tend to exponentially benefit in the upcycle. You want to sell in the upcycle because the price invites a lot of competition, a lot of new capacity, and that is not when you want to be allocated to metals. So our sense is again, as you said, there's been a substantial increase in commodity prices over the last few years. at these prices and at these valuations, perhaps it's not a safe bet to be invested in these companies. You want to invest when there is stress, which is when you make outsized returns in the space.
So you're saying that you may not make outsized returns, but you might continue to make your regular returns given the fact that there's probably not as much visibility with regard to metal prices cooling off. Is that probably the right way to think of this?
In the near term, but
Yeah.
like I said, given the rally, you must expect at some point the cycle will turn. And commodities, because the entire price decline flows straight to EBITDA and straight to PAT, the price corrections tend to have a significant impact on profitability. And in your mind, you should be ready to see that could happen in the next 12 months, 24 months. It's difficult to time that, but you have to understand you're at the top of the cycle in terms of commodity prices.
And power, how do you play that theme, or how do you avoid, or what pockets do you avoid, or what pockets do you play there? What's the thesis?
So power in India tends to traditionally was a regulated business. Some of the players even today are regulated businesses. They tend to make 15% ROE. Theoretical ROE, actual ROEs tend to be even lower than that. Now, traditionally we used to buy them at a discount to book value and then hoping we sell it at sort of 2 times book value. Most of these companies are trading at 3 times book value for, again, reasons which we don't understand. Their growth rates remain in single digits. Power capacity in India or consumption grows at sort of 6-7%. At that growth rate, to give them 3 times price to book, I mean, it looks, again, our sense is there is some sort of euphoria there in the valuation. T&D, again, there's a space which will do well because of renewables and what impact it has on the grid. But again, if you look at valuations, again, and the rival valuations that we saw in the 2003 to 2007 era for capital goods, at those valuations, you must be very, very careful. If there is any kind of negative event, the price correction can be very, very severe.
Seeing a lot of investment going to newer sectors like a data center and others. There's a lot of commitment which have been made with respect to the kind of investments which will go into data centers, not just by Indian companies but by foreign hyperscalers as well. And all this will require a lot of power because that's the basis for all those things. Do you think that the demand that is required in the next 5 years, we will be able to meet from the new capacities or capex which is coming up?
That itself is a question mark. I know. I mean, a lot of announcements have been made. When you look at the hard data in terms of where the sort of fuel will come from to power these, again, this is again because we are in an AI-driven bubble. A lot of announcements are made. Some for valuation, some could be genuine. But unlike the Western world where the power demand was stagnant and the AI demand essentially is pulling power growth for them, in India, power demand anyway grows at sort of 6-7%. When we looked at the numbers and we spoke to a few utilities there, it may add another 1-2% to overall power growth, which is not material for them to get re-rated the way they have. So again, our sense is valuations there have not made sense to us, and we've avoided that space at the moment.
And you see, especially in the renewable space where the CNI companies are getting a lot of orders from companies directly. Is that going to be some kind of trend going forward for you?
Sorry, when you say CNI, what do you mean?
The renewable companies tying up with industrial units directly for power as captives.
Yeah, I don't know how much of that really. So, see, in India, if you really want to have a meaningful play, it has to be at sort of SEB level demand, and at individual power units, I have no idea how much you can tie up with to have meaningful size. So there will be some impact of that. But in India, it's slightly more complicated than that because the industrial power subsidizes sort of agri and sort of other pockets. And already you are seeing notification where state electricity boards have complained that because of rooftop solar, their revenues have been impacted and trying to raise fixed costs. So one is a lot of these theoretical assumptions, but what happens to SEB health, and then how will the government react, and does it eventually push power costs higher for industrial units because they are now consuming lower solar units? It's not that simple a story as people think it is.
Okay, thank you so much for coming in and speaking to us, giving us that perspective. Was a very interesting conversation. All right, with that, we thank Nilesh. What we do is go across to Avi. He's standing by with all of the stocks that are buzzing and the reasons for that. Avi, what's on your list?
Let's discuss some stocks that are trending in news. Starting right off from Texmaco and Jupiter Wagons on the back of media reports that suggest that the Indian Railways is going to come out with a mega tender of 40,000 crores to acquire 1 lakh freight wagons over the next 2 to 3 years. Texmaco alone has a capacity to produce 15,000 wagons a year. The orders are expected to start coming in from Q2 FY27 with a delivery of around 40,000 wagons a year. Let's take our next stock. We have Aisha Motors with a good set of numbers, and the stock is up around almost 5%. The management is very bullish on the premium segment in Royal Enfield and is undertaking a 950 crore capacity expansion at their Chayar facility to inch up their total capacity to 2 million units by the end of Q2 FY28. Taking our next stock, we have Info Edge, which came out with a good set of numbers, but the stock has seen quite some opposite reaction. It is a beat on all fronts, and they say that the recruitment business margins will sustain if the top line grows in double digits. And 99 acres, this segment is expected to double in over the next 3 years. And the medium-term EBITDA is around 20 to 25% target. Job Hai also aims to grow 100% over the next year. Talking about our next stock, we have Greenlam Industries, which came out with a very strong set of results with the EBITDA expanding by 70% and the margins expanding by more than 30 bips. They far exceeded the revenue guidance for Q4 and are in line with the revenue guidance for FY26. The revenue growth was aided by growth across all segments for Greenlam. Taking a last stock, we have Sada Energy, which came out with a decent set of results but saw an opposite reaction with the profit up 55% and EBITDA up 30%. The company has achieved a balance sheet which is net debt free, and they plan to double their operational energy capacity over the medium term, and they are also targeting to double their EBITDA by FY 2030. The company has met its FY 27 EBITDA guidance of 2,000 crores. Over to you.
Okay, thank you so much for that, Avi. In fact, some of the other buzzers in trade, Q4 numbers, Vikrant Engineering. We spoke with the chairman and managing director of the company. He says that the company is confident of strong execution ahead. The company is likely to take up more projects in the solar segment. Listen into a slice of that. We'll step on a very short break, come back, continue conversation. Stock-specific action to follow. Stay with us.
Order book, and we are all set for the execution planning in the solar and the way we deployed our team. I'm just giving the example of this 969 megawatt solar power plant, which we have taken 100% stake in NOPL. So this will be the turning point. And not only for FY27, that with this 100% takeover, that every year average annual revenue potential will be approximately 525 crore per annum, which will be resulting approximately 450 crore plus EBITDA margin, that is 80 to 85% every year, contributing alone by this NOPL project. So this is with very, very strong base and very strong confidence we are moving ahead now. We very confidently will be achieving 15% EBIT margin, that for sure, and approximately 7.8 to 8% PAT as we almost in that same range. We are confident and we have already booked this order for this profitability.
Welcome back, and Ruchit Jain joining us at the top of this last hour of trade. Motilal Oswal Financial Services needs no introduction. Ruchit, how are you seeing markets today? What's the move looking like?
Yeah, hi, very good afternoon.
Very good
Overall, the move looks quite positive because what we have seen that 23,850, 23,900, which was acting as a recent hurdle, that has been surpassed with a gap up opening. And if you look at the last 15, 20 days when the markets have corrected, we have seen that around 23,300, the market Nifty made a good support base. And this is a higher bottom compared to the last bottom that we made around 22,200. So that higher top, higher bottom structure could get formed now since we have a higher bottom in place. So in the near term, we expect this momentum to continue towards 24,400, where the swing highs will be placed. So at current levels, I think the risk reward ratio seems to be favorable only to create fresh longs for potential targets around 24,400.
Ruchit, if you can also give us a sense of auto companies. you had Aisha, which is doing well today. You have Maruti, and then in the two wheelers you have Hero, Bajaj, and TVS. How is it looking for you?
So I think the sector as a whole, we have not seen that kind of relative outperformance, in this entire up move that we have seen since the month of April or March end. But there have been selective stocks, which are witnessing good price volume action. Aisha Motors, as you told, today have seen good resumption of the uptrend. Broadly on corrections, the stock has taken support around its 200-day EMA. And apart from this, I think the ancillary names such as Sona Comstar is there, Samadhanam Vadarin is there. The broader trend there seems to be positive. So it doesn't seem that we would see a sectoral uptrend going ahead, where the relative outperformance would be. But yes, selective stocks within the sector can do well.
Okay. Ruchit, in terms of a stock preference, what are those stock calls for the afternoon?
Yeah, so a couple of names that we are, we have in fact advised our clients also to go long. One is Acme Solar from the broader markets. A high top, high bottom structure has been formed. Recently, the stock went through some correction from the highs, took support around its 50-day EMA, and now seems to have resumed its uptrend. So the support base seems to be very strong. So at current levels, Acme Solar can be bought for short term with a stop loss below 285 for potential targets around 332. And from the large cap space, Bajaj Finance seems to be on the verge of a breakout from the recent consolidation. We have seen that the stock was in a very narrow range since last 5-6 days. The stock has taken those highs. So here the momentum, in fact, the entire banking and the NBFC space since last couple of trading sessions have been witnessing outperformance. And today the stock has surpassed its 200 EMA as well. So Bajaj Finance can be bought at current levels with stop loss below 910, expecting initial targets towards 990,000 kind of levels.
Okay. In fact, let me switch focus to a couple of buzzers. And Greenlam, a very strong quarter, Q4. In fact, Century Plyboards was the other one with a very strong set of numbers. We spoke with Ashok Sharma of Greenlam, and he's the CFO. And he explained what the impact with regard to West Asia could be and how it panned out for the company in terms of Q4. Listen in.
We are expecting a growth of around 18-20% on a year-on-year basis in terms of it. This was our guidance for the last year also, and we could able to clock around 18.6% in the FY26. We believe that going forward also we will be able to maintain 18-20% guidance on the revenue growth. Laminate, there was a growth of around 5% for the quarter, and for the year also it was close to around 5%. We believe this could be in the range of around 7-8% for the laminate, which is still contributes close to 80% of our business.
So that's of course on Greenlam. Steady quarter as well for Century Ply. In fact, a strong one. MDF business was driving growth. In fact, for Q4, we spoke with Mr. Keshav Bhajanka, who's the executive director there, to know more about the company and how Q4 panned out, as well as impact of the West Asia war. Listen in.
I think we have been able to reasonably pass on the increases. There could be a slight lag, but going forward, I think margins will come back within our guided parameters, say from next quarter onwards. So I don't think there's been any impact on demand. Yes, there could be a certain period of stocking, destocking as these changes play out, but that is temporary.
Okay, so that's the take with regard to both of those. Ruchit, what's the take with regard to both of these names? Because we saw some very sharp spikes and we've seen a very sharp cool off, equally sharp cool off thereafter on on a couple of these names.
So yes, I think the follow-up move is usually most important. Whenever we see such news-based up move or up move based on the results at the opening itself, then what the stock does after that to gap up opening is more important. So clearly, today post that gap up opening in stocks like Greenlam Industries, you have not seen that follow-up buying. And in fact, if you look at last 2 or 3 months, the prices have been consolidating within this broad range of 210 to 280. So breakout above 280 is required for a directional uptrend in the market. Otherwise, I think it was just one of a day with a positive opening, and that consolidation could continue going ahead.
Do you have any other picks in the home furnishing or real estate accessories business?
So I think now if we look at entire this real estate and related business, so we are focusing now more on the larger players from the real estate space itself. where stocks like Loda is there, or even Godrej Properties, their stocks have started showing signs of improvement from this entire corrective phase which the stocks have gone through till the month of March. So I think price-wise, most of the worst phase, seems to be over for these names. So gradual up move can be seen in stocks like Godrej Properties and Loda going there.
Hold on, we'll just come back to you shortly. We have Mitali joining us with some other stocks in news which is buzzing today. Mitali?
Talking about the stocks and news, first up is Blue Jet Healthcare. The company has recently announced their Q4 results, and if you see, the revenue has declined by nearly 31% yearly. The profits also have sharply declined to 64 odd crores. Margins are also seen under pressure, but you can see that even after the disappointing results, the stock is seen to be trading in green because company has approved fundraising of up to 1,000 odd crore rupees, and streets focus now shifts to the growth, visibility, and also deployment of this fresh capital. Next up is IRFC, which is back in focus after signing a massive 13,527 odd crore rupees of a refinancing deal for Hyderabad Metro project. The transaction, it marks a significant expansion beyond railways and also strengthens IRFC's position in India's urban infrastructure financing space. Next up is Park MediWorld, which has delivered a very strong operational quarter results. Consolidated profit for the company has jumped 58%, while the revenue for this quarter has risen nearly 30%. Company's margins, the EBITDA margins have expanded to 27.6%, but the key highlights for this quarter were the acquisitions. Company successfully integrated 10 hospitals, adding over 2,500 odd beds. Next up is Torrent Pharma, which has also posted a very strong set of numbers for Q4 FY26. Company's revenue have surged nearly 42% year on year, while EBITDA has also seen a surge of around 40%. If you see their profit, it has however declined due to the exceptional impacts and also higher cost. The company also approved a potential 5,000 odd crore rupees of fundraise via QIP and other routes, but the standout performance was from the semaglutide interaction that the company has seen. And if you see, Torrent's generic launches have now gained strong traction, with the company capturing already 38% of the market share. Finally, we have oil marketing companies which are also in focus today after the petrol and diesel prices have been hiked for the fourth time in just 12 days. The diesel prices are up 2.71 rupees per litre, while if you see, the petrol prices have also been increased by 2.61 rupees per litre. So stocks like HPCL, BPCL and IOCL, all these stocks are trading in green as these companies benefit from the fuel prices hike because their marketing margins will be improving.
Okay, thank you so much for that, Mitali. I'm going to come back and take Ruchit's view. I need to take a break, unfortunately, viewers. But come back, take Ruchit's view on some of those OMC names. They're buzzing in trade today, as Mitali pointed out. We'll come back, take stock of those. Stay with us.
Welcome back. You're watching Closing Trades, and we are above the 24,000 mark with the help of bank and banking shares. Actually, the bank index is up nearly 2.2%, and the Nifty over 300 points. Look at what's happening in the F&O market. And the Nifty up 1.3%. There's a premium of 69 points as we speak, and there's a jump of nearly 25% in open interest. That shows the hectic rollover that's happening to the next series, which is the June series at this point in time. Nifty Bank is also very active. As I said, the Nifty Bank is up nearly 2.2% in today's trade, with a nearly 27% jump in open interest there. So we are seeing the last 45 minutes of rollovers which are happening, as a result of which there is a we are seeing a short covering happening in the current series, which is May, and then the rollover fresh positions been taken up in the June series, which is there, and that's what is reflecting in today's market 24 crossing the 24,000 level. Look at what's happening in the options. You have the 24,000 strike very active, with a lot of put writing happening in the last 10-15 minutes. We're seeing some unwinding of call positions as well coming in there in 23,900 and 23,800, as a result of which if you look at the distribution, we are still holding fort with a base of 23,800, and there is still some resistance coming by the call writers unless that unwind happens in the next half an hour. So currently we are about 24,000. Let's see whether it holds that level. Future gainers include Adani Power, where there's a short covering happening. There's a 6.3% jump. Aisha is up nearly 6% in today's trade on the back of the good earnings which has come in, and Gale is up on the back of short covering. In the losers front, you have Siemens down 4%, Oil India which is down on the back of long unwind, and Nika up on the back of shorts which are getting built there, which is there. Open interest gainers include Bajaj Finserv, Phoenix Mills and Bajaj Holdings. There's a long build-up which is happening and substantial amount of open interest which is going to be built. Godfrey is seeing a short covering happening, KFin Tech is seeing a short covering happening, and RVNL seeing some short covering happening in today's trade there. If you look at what's happening in the most active, Aisha 7400 May call, 16 rupees up at 59, 18,000 odd contracts. That's an unwind which has happened since morning. With morning it was above 1 lakh contracts which got added, so there has been some unwind which is there. Interglobe 4300 May put has been the most active in the put side. The premium down nearly 6 rupees to 35 paisa, and 18,000 contracts which is getting traded there. So the stock currently at 44.89. We saw a big block deal also happening in Interglobe in the morning, so that's also an active stock in today's trade. But we have joining us now Daljit Kohli, who is a market expert, and Ruchit Jain is still with us. Daljit, how do you look at the current market? 24,000 Nifty, is that going to sustain today?
Good afternoon. See, day-to-day movement, it is very difficult for long-term investors like us to quantify. Yes, today, I think the mood is very upbeat because for the last 2 days, we've been hearing a lot of good noises on the war front. But we all know how fragile this is. It can change any moment. With one single tweet, things can go the other way around. So day-to-day movement, I think, is difficult to interpret. That will depend on various other situations. But I guess what market has given us in the last 2 months, we see how things have performed. It is giving us very clear signal that you have to be stock specific. You have to select the right stocks. And this is going to give you a lot of opportunities in various segments where you can actually build your portfolio for long term, no, for 1 to 2 years, because due to this sentiment, negativity, and all that, sometimes you get a very good company at a good bargain price. So you have to be agile to keep your eyes and ears open and look for those opportunities. I think this macro factor will keep on changing every moment. So there is no point giving too much of importance to these levels or too much of importance to these macro factors.
From a geopolitical point of view, which sectors do you see value now, given the fact that there's a lot of correction that has happened there as of now?
So, a couple of sectors like one which are beneficiaries of this war, which will be basically power and energy. So, within the power, there is a huge chain of things that you can play around, which can be like gas generators, power equipment manufacturers, cable guys. So, all these, and then power financiers, you can play any of these or a combination of these. Then you have the specific chemicals, no, certain specialty chemicals which are which will see the improvement in the realization but not a commensurate increase in their input cost. So there again you can find those stocks. Some of these agrochemical companies, some of them have given very fantastic results in the quarter 4 also. And then one sector which we are taking as a contra call is autos. Now, right now, the narrative is very clear. Everybody's been talking. Companies have also mentioned that they will go through 2 3 months of higher input costs. Therefore, margin pressure will be there. So yes, that is a reality that will happen. And in those negative news flows, if you get good stocks 5 10% cheaper, that is the thing that you are looking for your investment. Because demand side, we don't see any problem in the auto segment. So auto ancillaries auto OEMs, all these things again will play a good share.
Ruchit, let me come to you. If producers, if you can quickly pull out the intraday chart on the Nifty, we're obviously notching the day's high, but it's led by the Nifty Bank. And really, you can see the kind of spike you're seeing on the Nifty as well as on the Nifty Bank. In fact, 100 positive points contributed by HDFC and ICICI alone in trade today. That's driving really the Nifty Bank higher. Ruchit, what's the call with regard to private sector banks, and how do they look in terms of risk reward versus some of the PSU banks?
So we have seen a decent correction in the banking space in last 2 or 3 months. So I think from lower levels, if you look at the recent past of last few days, then the private sector banks have formed a higher bottom, whereas PSU banking's names have relatively shown a bit underperformance. So I think stocks such as the heavyweights such as Axis Bank or even ICICI and HDFC Bank can see some momentum on the positive side, which can lead the bank Nifty higher towards 56,000 to 56,500. So going ahead, although banking as a space, last couple of trading sessions itself, it's up. Today, Bank Nifty is up by 1,100 points. Even Friday, when the overall markets were not doing well, it showed a good relative outperformance. I think private sector banks can show some outperformance in the short term and can lead the Bank Nifty higher.
Picks within private sector banks, unless I missed what you said.
Yeah, so the heavyweights like Axis, ICICI, and HDFC, these are the three names which relatively are looking good, since the volumes are also good over there. So far we have seen in the last leg of up move in the private banks, the mid-sized banks such as RBL Bank, Bandhan Bank, they showed a good outperformance. But what we are witnessing this last couple of days, the volumes are more the heavyweights rather than the mid-size. So these heavyweights can show a good outperformance.
Okay, the heavyweights, not Kotak though. Ruchit?
Not Kotak really, because if you go by volumes, then I think there is more volumes which is happening in stocks like Axis and ICICI rather than Kotak. So if I have to choose anything, then definitely Axis and ICICI would be more preferred.
Ruchit, thank you so much for joining us this afternoon, giving us your perspective. We'll let you go on that note.
Thank you.
What, viewers, we'll also slip into a very short break. We'll come back, continue conversation with Daljit. He's still obviously going to be with us. Stay with us here on ET Now. Okay, thanks for being with us, viewers. The finance minister has said that the government has taken a revenue hit of over 1 lakh crore due to the excise duty cuts on petrol and diesel. This is not news, but it's coming straight from the finance minister herself. And she's saying that it's the hikes in the petrol and diesel prices are aimed at reducing the burden on the exchequer, of course. And this hit that they've taken is to obviously reduce burden on consumers. The FM also defended export duties on fuel exports, saying they were necessary to ensure domestic fuel availability and protect supply chains. Listen in to what she had to say.
The government is estimated to take a revenue impact of over 1 lakh crore on this one score in the year 26-27 because of this one decision. So the burden for a considerable period because of that reduction in excise duty had been taken away from the shoulders of the common people, because government has foregone or taken the burden of 1 lakh crore rupees on its shoulders. To ensure domestic availability of fuel, export duty or cess was imposed on exports of petrol, diesel, and aviation turbine fuel. So we are not allowing export because it's earning foreign exchange without attending to the domestic market's needs. In order to ensure that, we have imposed a duty on exports.
Well, yeah, that was the finance minister talking about the excise relaxations that was given to the OMCs as a result of which the exchequer will have impact of nearly 1 lakh crores. Daljit, what's your view on the OMCs at this point in time?
Daljit, you're on mute, I
you're
believe.
on mute.
Sorry. So we actually avoid this sector because of this very reason, that there is so much of interference and there is no clarity what these companies will ultimately make, and therefore as minority shareholder what will we make. So of course, now that they have increased in last 1 week 3-4 times the prices, but that is still is much lesser than what is required. In earlier good times, they were making a lot of money, but that was being passed on as excise duty to the government. So again, as a company shareholder, you are not making any money. So thematically, we are always out of this sector, because we see that there is not much as a shareholder we tend to gain even in the good times, and in the bad times actually we are the sufferers. So we will stay out of this sector.
And Daljit, sorry, I've got to shift focus back to the banks. Some of these private sector banks showing remarkable strength, right? At least on charts. Now, I know you don't track charts, but give us a sense with regard to fundamentals. Is that a trade or a tactical buy at this point?
So we are looking at mid-tier private banks, where there have been some deals also by the foreign investors, because there we see that there is a potential of both. One, the cost of funds going down, and secondly, because of availability of capital, the growth momentum will be much higher. For the established players, I think we will wait on the fences, because we feel that probably with this inflation scenario changing, how this monsoon will pan out, all these things will have impact on their growth as well as on the asset quality side. So if we see this in the entire Q4 numbers, all barring the private sector banks or the PSU banks, most other sectors have performed well. So in fact, this was the sector which was the I can say the biggest laggard. So we will wait for next 1 or 2 quarters and see how they are able to handle this situation of the impending drought kind of situation, this input cost going up for most of their users, how they will pan out. So as of now, we are playing only mid-cap private banks, but we are also bullish on the microfinance companies, because there the cycle is turning around after a very long period of consolidation and a lot of changes, policy changes happening. And then the NBFC is like housing finance, which again was a sector which has been very, very slow mover in the last 2 years. So housing finance can again see some movement there.
Also, if you can also give us a sense of some of the pharma companies. We've got most of them, most of the results out. Sun Pharma, Dr. Reddy's, Cipla. Are you a little cautious on companies which has a export component to it, and bullish on some of the companies which have more domestic play here?
No, I don't think there is any need for being cautious on the export play or in the pharma, because if there is an opportunity, if the company has a molecule which is doing very well in that region, then they will make a lot of money. In fact, this semaglutide and this peptide story, this has just started. No, so we have not seen the full benefit of that coming in. So therefore, we believe that pharma is one sector which will continue to perform well, and there you can play as a basket actually. So you can have a mix of 2-3 domestic plays which can take the benefit of this genericization of semaglutide. You can take the 1 or 2 international plays which will take the advantage of, because this molecule is going to get off patented in 80 countries. Brazil, India, MENA region, and there are some Canada already given. So there are 60, 70 countries which will open up for this particular molecule. So there will be a huge opportunity. And then the third segment within this will be the pen suppliers to these companies. the guys who will supply API, the drug substance, the pen suppliers. So this entire thing, you can make a basket of 3, 4 stocks and play this game. So I think pharma is going to be a favorite sector for next at least 2, 3 quarters.
Okay, let me also bring on board Amardev Singh from Angel One joining us this afternoon to give us his perspective on markets. Amar, we're speaking pharma. What's the view there?
First of all, good evening and thank you for having me on the show. So basically, what we are seeing in the pharma is that the pharma space has witnessed some up move and the stocks have rallied. So I would say that it's more of a defensive play also. If I first talk about Cipla had witnessed a significant correction, and then again, it's up by almost 15-20% over the past few weeks. If you look at some of the other stocks as well in the pharma space, so if I talk about Dr. Reddy's Lab, this stock also has been on a, I will not say on a roll, but yes, it has bounced back. So most of the pharma stocks are witnessing some sort of revival and upside move, but in some of the stocks, there is some sort of consolidation or profit booking also being witnessed. Lastly, I would like to talk about Aurobindo Pharma. Now, if I look at Aurobindo Pharma, the stock corrected significantly. It's trying to form a bottom. It's around very crucial support zones. So we could witness some pullback from the current level. So ideally, 1400 is a very important level for the stock. If it's able to sustain around those levels, then it could witness some pullback of around 10 to 15% on the upside.
Amar, what's your pick?
Yeah, so the first one is from the L&T. So if I look at L&T, what we are seeing here is that L&T had been consolidating for quite some time. It was waiting for some fresh triggers. If I look at it from a longer term perspective, we are seeing some positive signs here on L&T. So L&T is a buy at the current levels for an upside of 4,400. So that's roughly around 10% from the current levels. With a stop loss of 3,711. So this is the first one. And the second stock to look at is Titan. So what we've seen in Titan is that Titan has corrected. We've seen the stock correct all the way from almost 4,700 levels. There's a sharp correction. The stock is finding some strong support and base around the current levels. So at the current levels, one can look at initiating a long position with a stop loss of 3,903. And a target of 4,450 on the upside. Because overall, the long-term trend for the stock remains positive. Short-term, yes, we're witnessing some sort of consolidation, but this can be a buy at the current levels.
Okay. And Amar, just typically with regard to the index itself, what's the call there? Give us a sense. Where do you see the index move maybe in the short term?
Yeah, so if I look at the index definitely there was one thing very positive which was happening is that despite we've seen some correction, some upside move in the crude oil prices, some concerns, but markets seemingly they factored in a lot of this. And what we are seeing is that now the index has today closing above the 24,000 mark, which is definitely a positive sign. And somewhere or the other, there was very strong support for the index around the 23,500, 23,600 zone. So now the index is likely to inch towards the 24,500, 24,600. That's going to be a zone of resistance for the index. That's going to be something which is very important. But overall, right now, it does appear, and also, so it's more of news flows also which are impacting the market. So as long as we are seeing some positive resolution, I would say the downside seems to be limited. And the upside in the short term could be towards the 24,400, 24,600 zone.
And how do you look at some of the auto companies?
So if I look at the auto companies, first I'll talk about Tata Motors. If I see this stock, so there we are seeing some sort of consolidation. So if I look at Tata Motors, the stock after a consolidation is inching higher. So there could be an upside move because it has broken out after a long set of consolidation. So it could rally towards the 395, 400 levels as far as Tata Motors is concerned. If I look at some of the other stocks, So if I look at Bajaj Auto for that matter, so Bajaj Auto is clearly in for consolidation because the rally that was there that seems to be slightly tapering off because currently it's around the 10,400, 10,500 level. On the upside, seems to be capped around the 10,800 level. So we could witness some sort of consolidation here in this particular stock.
Okay. Park Medi was one of those which came out with announcements, and along with obviously Fortis's numbers, Narayan Health's numbers, some of those names came out with numbers also buzzing in trade. But with regard to Park Medi World in particular, they are set to acquire V3 Healthcare, around 177 crore acquisition aimed at strengthening the company's presence in North India. We spoke to Dr. Sanjay Sharma, Group CEO and whole-time director, who says that they will target 100 crore rupee revenue in the first year of the acquisition. Listen into a slice of that. We'll quickly take views thereafter.
We feel that adding this feather into our cap, we should be able to clock about 100 crores in the current year, first year, and with an EBITDA of 20%, which will be 20 crores, and the PAT of about 12%, which will be 12 crores. Going forward, we feel that this turnover next year would be about 140 crores with an EBITDA of about 25%, which will be 35 crores, and PAT of about 16%, 21 crores, which will be added to our kitty. And we would continue to spread our wings in Uttarakhand and in Uttar Pradesh, which are the new states which we have entered going forward. And this will definitely add synergy to our strength. We'll be opening up with all 330 beds, which it has the possibility because it's got a large land area of about 7,000 square meters and built up area is about 1.64 lakh square feet. The total acquisition 100% stake is about 177 crore. We are currently going for 80% at 141.6 crores. And the other 20% will be also acquired within a span of about 3 to 4 years. And this is the current scenario. And the all this funding will be done from internal accrual.
Okay, all right. So that's the view coming in. Daljit, what do you make of some of these earnings coming in from the healthcare space? Some very strong numbers, even from some of the larger players. Apollo came out with a good set. Fortis' set was not half bad at all. In fact, very decent set. Even Narayan Health clocked good numbers. What's the sense there? And is there a tilt preference in terms of names that you can give us?
So the sector has been doing very well for last many years. In fact, last 3-4 years, it has performed very well. And Max Estate, Max Health, if you see, it has become a multi-bagger in last after relisting once the PE thing happened, restructuring happened. So I think this sector is definitely in demand and it will remain in demand because we know the kind of deficiency we have in this sector in our country. But the problem is that most of the stocks are fairly or overvalued in terms of valuation. You can't justify entering at this point, barring a few where the catch-up has to happen or because they had their own reasons. So I'm positive on entire sector and all the names that you took. But as a preference, we have taken a cancer hospital called HCG. Disclosure that some of our clients might be holding it. I personally don't hold any of these stocks. So HCG, this restructuring is happening. KKR has come in. A lot of their debt and issues will be resolved over the period. And that in terms of valuation, because of these issues, it was trading at much discount to all these peers. We believe that this gap will be covered over a period of time. This is a 2-3 year story. I'm not talking of one or two quarters. This is 2-3 years story, and things are progressing well with the new management. So I think that kind of story one can look at. Unfortunately, I've not seen Park Medi, so I won't be able to comment on that. But I think specialty related health care stocks, they are going to do very well.
Daljit, how are you looking at some of the capital goods play, ABB, Siemens, Hitachi Energy? How are they looking? Because these are some of the stocks which has seen some kind of correction in the last 1 month.
after correction also they are so highly valued that you can't think of entering at this time. Value investors probably will not be able to take a call on that. Of course, they have a very long runway to grow and they are showing numbers, everything is coming. But the traditional way of the like last 3 decades I have been doing this. So it's very difficult to reconcile to enter into a stock at that kind of lofty valuations. But the way to play this story, as I said, we are also very bullish on this segment as such. So you have to find something in that value chain. No? So somebody who's supplying something to these guys, or somebody who's also related in the same sector, doing something, some other things, some EPC work, some like we talked about gas generators, we talked about cable guys. So those kind of names where there's still the valuations are reasonable, you can look at those. These big companies, they're already highly overvalued, I think. I'm not saying that they'll crash or they'll come down because they are showing numbers. But to enter, if you are already holding, very good. But if you want to enter now, probably the risk reward does not justify.
Okay, let me in fact go across to Ravinder. He's standing by. Ajmera Realty's numbers have led to the stock zooming. It was up 15% as soon as the numbers came out. Of course, might have seen a bit of a cool off. There you go. From there, 10% higher. You've seen very strong numbers. Best, in fact, quarterly top line that Ajmera Realty has clocked 450 crore, if I'm not wrong. Ravinder, how are the numbers looking? Unpack this for us.
Yes, Ajmera Realty reported a very strong set of number in Q4 FY26, and if we talk about the financials of the company's revenue has increased from 151 crore to 431 crore, and this strong revenue growth was driven by strong collections and executions in Q4 of FY26, and net profit has also increased from 24 crore to 58 crore, but company's EBITDA margin has declined by around 380 basis point on a yearly basis, and this contraction was mainly dragged by on the back of the cost of the material. Construction has related cost was up up more than 3.5% on a yearly basis, and employee cost has also increased from 7 crore to 18 crore, which has impacted the Ajmera Realty margins in Q4 FY26. And if we talk about the pre-sales and collections, then company has achieved highest ever annual pre-sales and collections in FY26, and company reported pre-sales at rupees 270 crore with an uptick of 8% on a yearly basis, which was powered by exceptional market absorption with 82% contribution from the new project launches, and collection has also rise by more than 74% on a yearly basis at 316 crore. And if we compare the pre-sales of guidance versus actual, then companies for guidance for the pre-sales was 1600 crore, and company reported actual pre-sales at 1701 crore. And company has launches 4 projects in FY26, namely Ajmera Manhattan 2, and apart from this 3 more projects with an including GDV of rupees more than 3000 crore. And if we talk about the growth outlook for FY27, then the company has a potential launches with an estimated carpet area of 36.85 lakh square feet and estimated GDV of 6,324 crore. And if we talk about the pre-sale guidance for the FY26, then FY27, then company has given a pre-sale guidance of rupees 2,200 crore and project additions of rupees 1,800 crore in for the FY27. So back of the strong set of number in Q4 FY26, Ajmera Realty is in focus.
Thank you so much for that, Rabinder. Of course, the newsroom having some fun over there in the background, but let me quickly take it to Daljit first. Daljit, Realty, what's playing out there, and how best do you play Realty as a theme?
So in fact, we take calls between real estate and cement from time to time, no? Because one is both are complementary, and one gives good opportunity over the other, then we switch between them. So for real estate, my view is that last 5 years, it has performed very well. They have seen a very long cycle of upward movement. Chances of price realization going up from here are much lesser because they've already played out in most of the regions. And the market has already discovered what kind of growth these guys are going to show. So it is known. There is no uncertainty there. Now the thing which will drive these real estate stocks will be the new business development. Oh, what kind of new land acquisitions they will do, what kind of new launches they will do, which we have seen in last 1.5 years actually has slowed down significantly. So unless that picks up, I think the real estate sector will remain a little sluggish for till the time those new developments come in, and also the previous launch projects when they come up now when the execution is coming closer. Most of the projects that were launched 3 4 years back are now coming to actually hand over. So how that behaves and how the market behaves at that time. So I think real estate will see a little bit of underperformance. To compensate this, we will buy cement. I think for last 3 4 years, cement has not performed well. Although if you see many of these cement companies, last quarter they have started showing some bit of volume growth, though realization still has to pick up. And input costs because of this gas, etc., there will be some issues. So maybe next 1 or 2 quarters, when the actual impact of this negative things will come, then you will get these cement stocks very cheap. No, they will become much better in terms of valuations. And for your portfolio over next 1 2 years, they will be a very good performance. So we'll look at opportunities in cement.
Do you have a call on Vodafone Idea? 14 rupees now, stock up 2%, but more than that, there's an CRISIL upgrade which has come to A minus. Things are now falling in place for the company to take capex, 45,000 crore capex ahead.
So the things have become very favorable for them. They have been able to get a lot of support from the government. Now the promoter from Birla Group, they're getting a lot of some money. They'll be doing some more funds raising also. So I think that that question which was there for last 2 3 years was the question of survival. I think that has gone now. From here, it will be how they will be able to compete against these two giants. Oh, and how much will they be able to garner market share? They have been losing market share in last 1 2 months. They've shown some improvement there. So there is a lot of catch up to happen. I guess if I have to play telecom, though we are not playing telecom at all because of this so much of competitive intensity. So we are not playing at all. But if somebody has to play, I think it is better to go with the leaders rather than somebody who is struggling to catch up.
Various themes that we just discussed with Daljit. Let me quickly take your view on that, on those as well. What's the take with regard to the healthcare stocks? Apollo, Fortis, Narayana, even Yatharth came out with numbers today. That stock too is down around 5% thereabouts. What's the sense on that pack?
Say that if I look at some of these stocks here, Apollo Hospitals so continues on an uptrend. There's no doubt about it. The way the stock has rallied. And if I look at the structure of the stock from a longer term perspective, that also continues to remain positive. But yes, the risk reward ratio in terms of entering at the current levels is something that one will have to keep a close watch on. The second stock, if I talk about Narayana Hrudayalaya, so this also was trading around the 1600. It's currently on the 1950, but it seems that somewhere or the other towards the current levels and towards 2000, the stock is likely to meet with some sort of selling resistance or profit booking, because only a sustained sustenance above the 2000 would lead for any further rally. Because if I go back and see, the stock had made earlier a high of almost 2200 levels, and then it had corrected. So this is on Narayana.
And what about real estate, Amar, very quickly?
So see, real estate, we are seeing some sort of bounce back, but it's more, we need to understand that these real estate stocks had been hit also very hard. If I look at Oberoi Realty for the matter, it's bounced back today, also a strong day. But again, on the upside for Oberoi Realty, somewhere around 1740, 1750, that's a zone where the stock is likely to meet with resistance. So most of the real estate stocks, we are seeing some pullback. The big question is that is it going to sustain? If I look at one of the other stocks on the major real estate play, DLF. So DLF also is clearly, DLF though is still not showing signs of any up move. It's corrected significantly. So most of the real estate stocks will witness some pullback. Whether they sustain is something that needs to be closely watched.
Okay, Sun Pharma, that's the other one. And we spoke with management earlier today. Here's a slice of what the management guided for.
At this point in time, generics business in the US, as we know in the past, has been facing pressures in terms of pricing, and it continues to be so. Our focus for US markets, like in the past, has been in terms of looking at and promoting our innovative medicines business. All our products, including Illumia, Sequa, Winlevi, Odopso, have all done well. We look at growth above the industry rates as far as India is concerned. We'll continue our focus on innovative medicines globally. And emerging markets has been doing quite well over the past few years. And in last year, we've also indicated that at a constant currency term, the growth has been around 8 to 10%.
Okay, what's the take here, Daljit? Big acquisition, Indian pharma major, and we've seen a very decent rally on the stock price as well over the medium term. What's the sense? What next?
So at this point of time, I think we'll prefer other stocks over the Sun Pharma, mainly because one, that the numbers which came in were lower than the estimate. So future guidance estimates have to be cut by all the analysts. Second, they're going through this big acquisition for which they will have to borrow some money, and how this integration will happen. That itself will take some time. So we will have to give that time. And the stock has already moved in the last 3 months. So I think valuation wise also let it cool off. At this point of time, I think our preferences would be Dr. Reddy, Lupin, Glenmark, those kind of.
Daljit, you've been very kind with your time. Thank you so much for joining us this afternoon, giving us all of those views. We'll let you go on
Just
that
one
note.
disclosure,
yes,
that I don't own any of these stocks, but we have recommended this to the clients, so clients may be.
Absolutely. Thank you so much, Daljit. Fully understood. You know what? We'll quickly start wrapping up for the day. Around 40 odd seconds to go for the close of trade. Amar's still with us, of course. He'll give us his perspective post-close. 330 points higher now on the Nifty. We've closed at the day's high, in fact, and plenty to cheer about in the day of trade today. We've held on. We've done very well. We've breached the 24K mark and we've closed higher. It's the banks which have led the strength. It's also IT to some extent, which has done very well for itself. Banks, in fact, the Nifty PSU Bank up 3+%, Nifty Bank up 2.5%. Auto, the Fin Nifty, Nifty India Defense, Nifty India Realty, all of them up 1.3 to 1.4 odd%. So some good moves coming in. Only the Nifty FMCG closed with a mild bit of red. Outside of that, IT up 0.25% as well. Metals up 0.6%. In terms of key contributors on the Nifty index, and here's what really stands out. 70 points by HDFC Bank, 45 points by ICICI Bank. So you've got those two banking heavyweights pulling the index higher by 115 points. Only those two stocks alone. There's also, of course, L&T, SBI, and some of the others, Axis Bank as well, also chipping in. And when you add all of those, you're seeing a nice chunky number, nearly 180 points higher on just those 3 or 4 names that I took. So some very decent gains. The breadth was favorable and that aided the index higher. In terms of stock-specific action on the Nifty 50, some movers there as well. Adani Enterprises up 4.5+%. Aisha Motors was the big one, 6% plus higher. You've got Bajaj Finance up nearly 3% as well. Tata Motors, PV, L&T, HDFC Bank, all 2.5% plus higher. HDFC Bank, the heavyweight, obviously pulling its weight. Max Health, ONGC down, so was Hindalco, down 1% or thereabouts. The run-up in the stock price, creating that 1% downtake despite a very decent set of numbers, a resounding beat in fact. Infosys down 0.5% as well, TCS down around 0.5% as well. So a mixed bag with regard to the Nifty IT names. Within the Nifty 500 basket, some movers there as well. I want to quickly mark out the top losers. Polymedi on the back of numbers, Sarda Energy on the back of numbers. We spoke with management as well. Shipping Corp down 4%. You've got Siemens down 3%. Timken India, Oil India down 3% plus as well. Titagarh Rail flying in trade, 10% plus higher. MV 10% locked in upper circuit. HFCL, Blue Jet Health again on the back of numbers, 10% higher. Amara Raja, Jupiter Wagon, 7% higher on Jupiter. Adani Power and Aisha Motors were just some of the other big movers in trade today. Let me go across to Amar. Amar, far better looking day, right? Far better looking. It's been a while since we saw a day like this. Anything structurally that changes for you with regard to charts?
Yeah, I would say that what I've said earlier also, that clearly there is one positive aspect, is that markets have, or the benchmark indices have really held on to quite firm. So despite high volatility being witnessed, Nifty was strongly supported around the 23,300, 400 levels. And also one good thing which I'm seeing is that the banking index, that is the bank Nifty, is showing some signs of further strength here. So because it was earlier unable to breach the 54,000 level, it's currently trading around the 55,000 odd level. So sustaining above this, then Bank Nifty could rally towards the 56,000, 56,500 levels, which could help or aid Nifty in particular also, because we are seeing some positive momentum build up in some of the large sector, both private and public sector banks.
Okay, thank you so much, Amar, for coming in, joining and speaking to us, giving us all of those views. And viewers, completely timed out on this edition of Closing Trades. Thank you so much, Amar. From Sajid, myself, everyone who puts the show together, thanks so much for watching. Stay with us here on ET Now. More action to follow.